What's up everybody, welcome to the Stocks channel. My name is Corey and today in the stock market we did see a pullback from resistance as the Bollinger Bands are squeezing very tightly before we get CPI data this week. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were down 1.14% after we did get 2 days of getting rejected from that resistance right around 390, and now we're pulling back down towards that support zone at 380. Now there's two things I want you to pay attention to, and the first one is how tight these Bollinger Bands are squeezing and how tight we're getting in this consolidation wedge, because it's going to be a very impulsive move when we get the breakout. So when you get these periods of consolidation, it is normally right before a major move in the market, and that is why I think if you're just patient and you wait to see which direction the market breaks out from here, you are going to be in a much better position. You're better off just flipping a coin if you're going to guess which direction we're going to break from here, because nobody knows for sure, but I can assure you if you wait for price action confirmation, you will have a much better time trading this breakout. So for that reason, you really only have two critical breakout levels, and that's SPY above 390 to 393 or SPY breaking down below 380. You can stay bullish on SPY while it is above 380, but if SPY breaks down below 380, I think you need to get risk off because we're more than likely seeing SPY coming down for that next leg lower, and we still do have a valid price target down there at 350. Now, if we get the bull breakout above 390 and above 393, it is very likely that we will fill that gap at 401. We could continue through that gap, but the big bad bear is waiting at that resistance. So if the bulls do get through that gap, we will likely see a short squeeze to the previous daily high just below 418. So to make this very clear, there's only two things you need to watch, and that's whether or not SPY breaks out to the bull side above 390 or breaks out to the bear side below 380, and then just have a trade plan to act accordingly. You could take a bet on where the market is going to break from here, but just make sure you manage your risk above 390 or below 380. Or just be patient and wait for the confirmation in the breakout. Keep in mind, if the bulls do get the bullish breakout above 393, we will have the higher low and the higher high, and that is exactly how every single bull trend starts. So if we do get the bullish breakout in the price action, we will have a bull trend in the short term, and the bulls will take advantage of that because they have been getting absolutely routed by the bears all year long. And if the bulls get the advantage of a trend, they're likely going to push very hard. So do get a lot more bullish if SPY starts breaking out above 393, and a lot more bearish, which you should already be expecting the bear scenario in a bear market, when SPY breaks below 380. On the Nasdaq 100 triple Qs, we were down 2.14% after getting rejected from that resistance zone right around 296, and as you can clearly see, we still have the gap to fill at 299, but unfortunately for the tech sector bulls, the big bad bear is waiting at that gap just above, so we're already starting to see the bear attacking in the tech sector, driving prices down below resistance before that gap can fill. Now, if the bulls are able to fill that gap at 299, that will mean they have the higher low and higher high on the daily chart, which will develop a bull trend. So there will be a very epic battle in the triple Qs right there around 299 to 300. And if the bulls are victorious, the bears will retreat all the way back to the previous daily high just below 315. So in the triple Qs, the critical breakout for the bulls is clearly above 297, and the critical breakdown for the bears will be down here below about 284 to 287, because that is where our support trendline breakout is and our critical support at 287. So you have two critical support levels you need to watch in the triple Qs at 287 and that 20 simple moving average just above 284. And if the bulls do start to get a positive slope on that 20 simple moving average and get the bullish breakout above 297, they will have a bull trend that they can start building on, which means we could see a sustainable bull rally in the near future. However, you need to let price action prove it, so there's no reason you should be getting bullish until we get the confirmation of that breakout. As long as the triple Qs are below 297 and below the 50 EMA where the bears live at, we have a valid price target to the downside down there at 258. So just take the downtrend seriously, which means you should be making the bulls prove it to you with the price action. Otherwise, you need to remain bearish below resistance. If the bulls get the bull breakout above resistance, that's a completely different story, and we will instantly start getting more bullish in the event we get that bullish breakout. In the Dow Jones, we were down 0.56%, and the Dow Jones is very similar to SPY in the triple Q, still consolidating into a wedge at a higher low, lower high situation. So the bull breakout in the Dow Jones will be that breakout above about 319 to 320 and fully closing that gap at 323. There are going to be a lot of bears waiting just above at these gap fills in the indices. So we need the bulls to prove it by getting those bullish breakouts to the daily higher high, squeezing the bears out above the gap, and then retreating back to the previous daily highs, which in the Dow Jones is at 333. So you can see all of the indices are consolidating and building up momentum with the Bollinger Band squeeze, getting ready for that next leg higher or that next leg lower, which is likely going to start playing out as soon as we get that CPI data. If the Dow Jones starts breaking down below 311, look for that 20 simple moving average just below 309. And if we lose all of that support, look for the retest of the low at 297. And if we break the previous low, look for the next leg lower at 285. So as you can clearly see, the next leg is either going to be a brand new 52-week low or breaking out and retesting the previous daily highs. So it's going to be a very volatile move once we do get the breakout. In the Russell 2000 IWM ETF, we were down about 2% today, coming back down to the 20 simple moving average. So we do have that support zone right around 170 to 171. But if we lose that support, look for a retest of the low at 164, which will be below that lower Bollinger Band because we are getting that very tight squeeze in the bands. If we break below 164, the next leg lower will be at 156. And the bull breakout at this point will be back over 179 to close the gap just below 184. And if we can close that gap, that will be the bull breakout for the test of the previous high at 191. So it's going to be very evident in the very near future whether the bulls get the breakout or the bears, so just be prepared for either scenario and then act accordingly. On the ARKK ETF, we were down nearly 7% today with that very clear rejection from 47. And remember, I continue to remind you that this isn't a bear market and the bears are going to show up at these resistance levels. So you should have been expecting a rejection at resistance because the bulls have everything to prove. And until the bulls prove it with the price action, all benefit of the doubt goes to the bear trend and the bear market. So from here, ARKK needs to hold up above this support right around 42, or it's likely coming back down the retest the low at 36.5 or make that brand new leg lower at 33.7. If we start getting consecutive closes above 47, we will get the bull breakout, but we cannot assume it's going to happen. We need to wait for confirmation. In the VIX, we were up just over 6% today, and the VIX did spike back into the lower support channel trendline after bouncing off of that support right around 24. So we clearly see the VIX is still elevated and still trading above 24. So you need to expect a volatile market while the VIX is above 24. If the VIX breaks down below 24, we can get more bullish. And if the VIX spikes out above 30, you need to get ready for that next leg lower in this bear market. On Bitcoin, we're currently down about 2.4%, with Bitcoin getting rejected around that resistance zone at 22,000, which means it could be coming back down to support right around 19,000. Bitcoin is either going to break down below 19,000 and start trending towards 12,000, or it's going to break out above 22,000 and start trending up to 25,000 and then 28,000. So for that reason, on Bitcoin, I would wait to see the breakout below support or above resistance and then just be ready to act accordingly. You can see the Bollinger Bands on Bitcoin are extremely tight and very contracted, which means they're going to start expanding once we get that breakout. So just be ready to act accordingly once we get the bear breakdown below support or the bull breakout above resistance. On NVDA stock, we were down 4.33% as we fully closed the gap to the downside, and now we're left with only all of those gaps to the upside, and we're trading just above 150. So you can clearly see we are still below the resistance trend line, and we are still in the bear market, still in the downtrend, and still getting rejected at resistance. So there's no way you can be getting overly bullish on NVIDIA just yet. However, all of that changes if we start getting daily closes over 161, because then we'll have a higher high after putting in this higher low as long as we can stay above the previous low just right around 145. If we break down below the previous low, we still have valid downside price targets while we have the bear trend at 130 and 125. But if we get the bull breakout above 161, look for a retest of the high right around 171 and then closing the gap right around 180. If we can get all the way back over all of this resistance and clear these daily highs, we will have a bull trend in the short term. And then I will think that we've seen the bottom in NVIDIA stock and we can start seeing a sustainable bull rally. But price action has to prove it, and right now the price action is still telling us it's in a downtrend. On Tesla stock, we were down 6.5% today as Tesla got rejected at that 50 EMA and came all the way back down to support at $700. So we're still seeing strong rejections at resistance, which should be no surprise because those bears are not just going to roll over and give up without a fight, and you are going to continue to see bears showing up at these resistance levels. So Tesla did get rejected from resistance and came back down to support. So now the ball is in the bulls camp to decide whether or not they're going to defend support at $700 or let it come all the way back down to the bottom of the wedge right around 654. If we break below 654, look for a retest of the low at 620. And if we lose 620, the next leg lower is down there at 571. The bull breakout will require a close above 750 and then 775. and then we could start to run back up to the 8 to 900s. On Apple stock, we were down about 1.5% today, closing back down below the 50 EMA, but overall Apple is still looking relatively bullish, losing the bear trend in the short term with the higher low and higher high. And because Apple is a market moving stock, I do put significant weight on the fact that Apple is starting to look bullish. Apple could be giving a sneak peek of what's coming to the markets with this bullish breakout, so don't completely write off the fact that Apple is looking bullish in the short term. However, we still have very critical resistance in Apple right around 148 to 150, so that will be the next bullish breakout at this point. So I do think most of the risk reward is still for the bears until the bulls can clear this resistance and then start running for that next leg higher. So Apple is getting a lot more bullish above 150, and above 150 we could start talking about filling that gap up there at 174 with the downside critical support all the way down here at 138. So do be a lot more cautious if we continue to get rejected around 146. If we lose support at 138 to 137, look for the gap fill at 133. But overall, I do think the bulls are in control of Apple stock at this time. On the financial sector, we were down 0.81% as the financial sector did break over the 20 simple moving average and now holding that level as support. So it could be possible the financials are trying to turn the corner and bounce off this support to go close the gap above. But if we break down below the 20 simple moving average, look for a retest of the critical support at 30.8 and pay attention to how tight these Bollinger Bands are squeezing, because we will see a very large move in the market once we see these Bollinger Bands expanding. On the industrial sector, we were down 0.67%, closing back below all the moving averages and regaining the bear trend, but we are still above the support zone right around $85. We have gaps to fill to the upside and the downside, so watch to see which way we break and then act accordingly. The healthcare sector was down 0.25%, still struggling around that resistance around 131, but still developing a bull trend in the process with that bullish breakout look above all the moving averages and building up that bull trend. If we can clear 131, look for a quick trip to the next resistance at 134. The energy sector was down about 1% today, closing right around that support zone at $70. And if we lose that support, we could be going down for the next leg lower down here right around 63, even though we will have support on the way there at 66.5. So jumping back over to the S&P 500, I continue to remind you that this is the best time to be patient and just know which way we're going to break out by making the price action prove it. Yes, you could guess and you could set your risk accordingly, but you're much better off as a disciplined trader waiting for the confirmation of the breakout and then acting accordingly. It's going to be a very boring and dull market until we get this breakout, but the breakout should be very impulsive and it should lead to a very large move in the markets. So know the critical resistance breakout around 390 to 393 and the critical support breakdown below 380, and just be ready with a trade plan to know exactly what you're going to do no matter which scenario we see play out. There's no reason guessing or trying to predict what the CPI data is going to be, because the stock market is very efficient and you have no idea what it's already priced in or what it wants to do after the data releases. So try to leave all of your guesses at the door and just have an objective trade plan based on price action. Always use great risk management, be disciplined, and be patient. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.